Let's see. My name is Ashley Mataisi. I am the Director of Outreach with 10 Capital. I am joined today by the founder and CEO of Kickfurther, Sean De Clercq. Sean, thank you so much for joining us today.
Thanks, Ashley. Excited to be here.
Yeah. So just a little info on 10 Capital before Sean gets started. We are a funding as a service program. So we leverage our network of about 12,000 accredited investors to help founders and entrepreneurs raise funding. So if anyone has any questions for that, I will put up my email at the end of the presentation. But if Sean, I know we have a really interesting topic to go over today, so I will hand it over to you.
Awesome.
Thank you. Real quick,
Ashley.
if anyone has any questions, please feel free to drop those in the chat box and we'll get them answered. Thanks.
Awesome. So I will start with a little background on myself, Ashley, if that works. So my name is Sean De Clercq. I'm the founder and CEO of Kickfurther. Prior to starting Kickfurther, I was running my own merchandising company. So we were buying products from retailers over in China, making them a little bit unique and then selling them, buying from factories in China and then selling to retailers here in the US. And what we found was we were having an issue that won't be uncommon for your audience, right? We had to pay our factory months before we got the inventory and we were able to start earning revenue for selling that inventory. It made sense. Our business was only a couple years old. And so the factory wasn't willing to extend credit. And similarly, on the US side, when we looked for partners to help us fund our inventory production, it was really sparse. This was in 2011, 2012. The best options we found at the time was a 5% discount per month from an accounts receivables factor at the time. And for us, that would have taken our wholesale business, which was running on about a 30%, 35% margin, to pretty much losing money on every order we had to finance because the cost of capital was so high, right? So 90 days of finance, 30 days production, 30 days shipping, 30-day payment term, right? That was a 15% discount against my PO on a 30% margin, and overhead ate up the rest. And so we went from a growing profitable business to pretty much bleeding red ink on any deal that we had to finance. And so at the time, it just seemed insane to me that my business was being charged 5% a month, 60% annualized. And at the same time, my money was sitting in a bank account earning less than 1% a year, right? Less than the rate of inflation, losing value every day that it sat in that bank account. And so it just seemed like there was a massive gap in the market. And we said, why don't we create a solution where anybody can buy the inventory for product companies, right? We'll have the inventory produced, we'll have it shipped to those product companies. They can sell through that inventory, and as they sell it, they pay our community of users back. So the time of payment coincides with when the sale happens, which makes it very, very flexible and meets product businesses where they need to be, right? And that makes sense because that was me. That was my business. That was the problem I had to solve. So I built the solution that I wish that I had all those years ago. And I think that the market has responded and really shown us that this is something that's working tremendously well. So if you go to kickfurther.com/co-ops, you can see that in our recent funding marketplace, we have done deals to the tune of funded, for instance, Evolution Salt Company. We did $210,000 in 11 minutes. Knuckle Lights, we funded $35,000 of inventory in 38 seconds. I mean, this is unbelievable, the response that we've had from people that are so excited to support entrepreneurs. We're only in America right now, so there's, it's American entrepreneurs. There's so many people that are super excited to support entrepreneurs and to earn, an attractive rate of profit on the capital that they use to fund these businesses. So we thought that that's kind of at a super high level what we're doing at Kickfurther, what we believe in. And, the last 9 months have been crazy, right? So if you've been watching who hasn't been watching what's going on, right? So it's been a wild, tumultuous ride. And for a lot of our product companies, a lot of the entrepreneurs that we work with, at the end of March, we saw that people who had these financing relationships, and they had lending relationships for a long time, pretty much evaporated with very little warning for these product businesses we were working with. And, I think that it makes a lot of sense when you look at how uncertain things were and nobody really knew what was going on. That's a challenging environment. But at the same time, we also know when you look at what happened, right? This was great if you're an e-commerce business. Pretty much every single business that we work with that had e-commerce as one of their primary distribution channels actually saw an increase in distribution through the pandemic. And when you think about consumer trends, that's not unsurprising, right? Because you have the same people, right? A lot of them were working from home, but they got their stimulus packages, right? $1,200 checks, and they didn't have any spending, right? They weren't going to the bars, they weren't going to the restaurants, they're not buying gas, they're not driving, they're not going on vacation, right? So there's this huge amount of consumer spending that had nowhere to go. And so what people did is they shopped online, right? That was a great outlet for that. And so e-commerce in the last 6 months, 9 months, it's been a crazy lift, actually, between 20, 40%, depending on the product, and pretty universally across e-commerce. So it's been doing really well. And at the same time, those e-commerce businesses that need to continue selling inventory need to continue to fund the production of the inventory. So it's been a really interesting time for Kickfurther as well, where we find that the environment is, it's uncertain. So people haven't been, have tightened up a little bit in terms of the risk that they're willing to take. And at the same time, product businesses have been doing really, really well. And because of that, they need to fund their inventory for ongoing growth. And so it's been kind of this perfect, to describe it as a perfect storm of, a confluence of events that has really, really highlighted the unique value that Kickfurther provides in comparison to the rest of the market. Because what we're doing is we work alongside of the business. We get the inventory funded, right? And what we do is we qualify our businesses and we look at them as, is this a product business that's more likely to succeed or more likely to fail? And then we allow them to participate on the marketplace, right? And so because we have this, I kind of call it like two-factor authentication, right? We kind of have two different groups, both Kickfurther and our community of funders are looking at the businesses. We've been able to continue to support our businesses. We never stopped. We never reduced our support to any of the businesses that we worked with on Kickfurther. And we've seen commensurate rewards for that, because a lot of the e-commerce businesses that we funded have performed extraordinarily well in the last few months.
And what kinds of, who can be in your community of funders? Who can be an investor in your companies?
Great question. So anybody, what you're doing on Kickfurther is you're actually purchasing physical goods, and then you are placing them on consignment with a business owner. And you even have the opportunity, if you want, to sell through that inventory you helped fund as an affiliate and earn a commission from the business owner. So that is what allows us to make this available to anyone and everyone. Because what you're doing is you're buying physical goods, just as if you went on Alibaba or Wish.com and you bought, 10 sunglasses and you took it to your local consignment shop down the street and said, hey, will you sell this for me?
Great. Do you need to wait on receiving a PO to fund inventory?
No, so I think that's one of the key things that is another great unique value proposition of Kickfurther is we're very happy to fund inventory just against the strength of e-commerce or direct-to-consumer distribution channels. So what we look for is a track record of success. We want to see businesses that are able to get their inventory produced. They've identified a customer base that wants to buy their inventory, and we're happy to provide the funding for that inventory, even if they don't have a PO. And that being said, we work really, really well with businesses that have POs. So we're able to extend payment terms to meet the business when they get paid is when we can set our consignment opportunity to be, meet them there.
What does the payout look like for an investor or a funder?
Yeah, I think that's one of the coolest parts of Kickfurther as well, is when you're funding one of these businesses, we have a separate buyer page for each deal. So you then get put into kind of like your own little room with all the other people that help support this deal. You get the updates from the business owner as things progress. Our businesses have been getting better and better about providing like pictures and stuff like that, which, our users really love to see the impact that they're having. And, it's variable, right? And that's the truth. I'm sure it won't be a surprise here that these product businesses are pretty different. So we'll have businesses that, have longer production schedules because they have more complicated products. And so it might take 4 months, right? Between when we're funding the production of the inventory to when that business gets paid, right? Like, let's say they're selling all of it to Target, right? And Target has them on a 60-day payment term, and they've got 30 days production, 30 days shipping. That's 4 months before you're going to see any payouts as a user on that deal. However, what's actually more common on the platform is funding businesses that have a diversity of distribution channels. So we fund 1,000 units of backpacks or whatever, right? And then they sell 10 units or 20 units through their e-commerce channel. They sell 200 units through a distribution channel, right? We would see the payouts for those 10 or 15 units they sell through e-commerce in about 2 weeks after the sale happens. So businesses that get funded on Kickfurther, that's kind of the shortest time frame, is you can start to see payouts within as little as 2 weeks, and I would say the average is about 6 to 8.
Okay. What about margins? How do people figure out margins, and if this is going to be a cost-effective solution for them?
For the businesses, I think that's one of the other things we do. You keep saying that. I'm like, oh, we're just so great. No, so what we do is we operate as an increase on the cost of goods for the businesses that we work with. So right now, you're funding your inventory, right? You buy directly from the supplier at $1. When you work with Kickfurther, we just have an increased cost of goods price for you. So maybe you fund the inventory for 6 months and you agree to a 10% consignment profit. You might be looking at your cost of goods being now $1.10, right? And that's the way the businesses can factor this into their costs, is they just change their cost of goods line within their business model, and it flows through, as opposed to other financing that has monthly payment terms or whatever else. It's actually very easy to model and predict the cost of using Kickfurther for a business owner.
Mm-hmm. Okay. Can someone use Kickfurther if they have international suppliers?
Absolutely. So international suppliers is, if we didn't allow that, it would be a very, very small market that we would be pursuing, right? That's where the majority of manufacturing is happening, is international. We like domestic suppliers. It's one of those things that actually we consider to be a de-risking factor if you have domestic suppliers. But international is where it is, right? 85% of all stuff, if not more than that, is produced internationally. So, we allow international suppliers. We prefer domestic distribution as much as possible. So we have a preference for your customers to be located in the US.
Okay. How does one figure out the right amount to use inventory funding for?
When you mean the right amount, do you mean how much inventory to fund?
I suppose, yeah. Mm-hmm.
Yeah, I would say, so that's kind of two questions. So one is it's really demand driven, right? So what we see in the businesses that we work with, they're pretty sophisticated. They've been in business for a few years now, and they know, right? Like, I need 3,000 pieces. That's what I'm going to sell through in the next 6 months, right? And it's going to go 700 pieces to wholesale, 500 pieces here, blah, 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 right? So it's really based on the demand that the business has, is how much inventory they need to fund on the Kickfurther platform. And that comes to us from businesses. And what we've had a lot of success doing is talking to those businesses and saying, hey, if you go back to your supplier and you fund 6 months worth of inventory, right, as opposed to your regular turn of 3 months of inventory, can you get a quantity discount from your manufacturer for buying more inventory? And when they're able to do that, oftentimes the cost of funding inventory with the quantity discount is less than what they were paying at the lower production rates, right? So they can almost cover our cost by getting a quantity discount from the manufacturer. So that's a time, if you're close to that inflection point, that it's a great time to fund inventory. If you can get over that line, that can have really nice impacts on the business. But I encourage all business owners to start early, right? To establish these funding relationships, whether it's Kickfurther or anyone else. Our deals start with as little as $20,000 of inventory. And whether it's Kickfurther or anyone else, these are all relationships that are built. Trust and credibility is built over time. If you've got a business and you're able to demonstrate a track record of going from 20K to 40K to 80 to 100, right, you're going to be able to leverage that credibility to get great rates for your business.
Mm-hmm. And what about the relationship with the manufacturer? What does that look like? Does the Kickfurther money go straight to the company or straight to the manufacturer? How does that work?
Great question. And the answer is it depends on the business. So for us, this is one of those things where, because we want to serve as many product businesses as we can, we look at all of these different factors, one of which is the inventory pre-existing? Does the inventory need to be produced still, right? There's lots of different dispositions of inventory that we can work with. If the inventory still needs to be produced, our preference is to pay the supplier directly. We consider that to be something that makes production a little bit less risky. But we have lots of companies where they just received a shipment of inventory. They need some cash flow. We take the inventory, fund that inventory that they just received, and then they can use the cash to grow their business.
Okay. And what about like other funding sources? It sounds like inventory funding is really great for product companies, but what else can they look for?
So today there are a few different funding opportunities out on the market. So pretty much every single point of sale system has their own capital platform as well, pretty much all of them. So if you're selling through Square, if you're selling through Shopify, they have capital as well. So Shopify Capital, Square Capital. If they haven't reached out to you, most likely you don't qualify. They're pretty proactive about reaching out to the businesses that qualify for their lending. Amazon has capital. There are entrants like Bluevine, which is AR factoring. There's Clearbank, which provides revenue-based finance. So there's a lot of different options on the marketplace. I would say payment processing funding is one of the most popular today because they're already tied into your business and already have a lot of the data they need. I would say today the environment that I've observed is that equity is picking up again as well. So we're seeing that investors are looking at making bets on businesses that have either made it through and seen positive impacts from the recent events, or businesses that have started, right? And now is a great time because other businesses have gone out of business. There's an opportunity to get talent, space, mind share, whatever. It's kind of like a discount market right now, a buyer's market if you're an entrepreneur. And so there's equity funding is increasingly available as well. We're seeing that these VCs are starting to look for new opportunities as well, as opposed to they were very much in a defensive posture of protecting their portfolios for the last 6 months or so. So there's equity, there's traditional SBA loans, right? The SBA is doing some good things to try and support businesses through this pandemic as well. And each of these different sources, they kind of have their benefits and their drawbacks, right? So typically, SBA is not going to scale very quickly. It's going to take longer to secure. Sometimes it doesn't work for those fly-by-night opportunities that product business owners see. And then it's just a question of, working down through, the other attributes of what works best for a business. But I'd say that's pretty much it. And then for the super early businesses, I always encourage people to look at Kiva Zip, which does interest-free loans for up to $10,000 for US businesses. So that's earlier than Kickfurther. If you're in that kind of place, I think Kiva Zip's a really cool opportunity there.
Very cool. Okay, I feel like I've been monopolizing all of the questions. So just a reminder that if anybody has any other questions, we're happy to get those answered. How long have you had Kickfurther? About how long ago did you start this?
So we started Kickfurther, we incorporated August of 2014. We went through an accelerator program, and then we soft launched in January of 2015 and have pretty much been building the platform since then. Yeah, it's been a very, very interesting 6 years, is what I'll say.
Yeah. And what was your business before that you were having the inventory issues with?
So it was a company, it was called CPG Merchandising, China Performance Group Merchandising. Really, compared to Kickfurther, it was a very simple business, right? You buy product for X, you sell it to retailers for Y, and you make the difference, right? That was our whole business. My background in supply chain management, and this is something I think that Kickfurther does pretty well, is in looking at the supply chain relations. So we invest in customer success as well. I would say if anybody's listening to this, they have questions about supply chain management, that's something that we invest in. We think it's core and critical to the success of the entrepreneurs we work with. So, and is an area where we invest in customer success. So that's kind of my background, is all in, how can we leverage supply chain management, right? And this is, it's kind of like funding the supply chain, right? From where I was, which was at the factory level in China.
Mm-hmm. Well, great. Well, I think I'll give a last call for questions. I believe we covered everything. Sean, is there anything else you wanted to share before we hop off?
Yeah, so Kickfurther, we are doing a $250,000 growth giveaway. So in the last 9 months, we know things have been pretty crazy. And so we wanted to support our community to the best that we can. And so we're doing a $250,000 inventory funding giveaway for the best growth story. You can find all of the details at grow.kickfurther.com/2020-giveaway. And the terms, what we're looking for is the product business with the best growth story. And I think we have a bunch of partners that have put together a really excellent prize package. And the other thing I'll say is we have just like an amazing, outstanding panel of judges that includes Bill Ty and Draper Associates, some legendary investors that are going to be judging the product businesses. So a great opportunity to get your business and your brand in front of some really excellent people, and also to receive some funding to continue to power your growth.
Fantastic. That's very exciting. And to all the attendees, I will be sharing that link post this webinar. So don't worry if you didn't get it all written down. But again, thank you so much, Sean, for being here. I think that's it for questions. I did just launch a poll, so if everybody can go ahead and answer those questions, that would be great. And we will wrap up on that note. Thank you so much.
All right, awesome. Thank you so much, Ashley. This was great.
Thank you.
Bye.
Bye.